All right, guys, welcome back to another episode of Everything Business. As was promised, I will do a past paper question for partnership account. Right now, this is a very old question. This is all the way from 2005. But the information, the theory, the practice, the practical, right, everything that you need in order to do a partnership account question is in this question. And if you are able to do this question and get the full 20 marks for this, then you would have been proficient in partnership accounts. So watch till the end, right? And let's get right into this video. So the question, the first thing you do when you see a question is to read through the question. So we look at the question, we realize that we have two persons in this partnership, Chris and Dorcas. We are given their capital balances information, current account balance information, drawings information, right? We are given some additional information as it relates to how profit and losses are to be shared. They are to be shared in the same ratio as their capital. Chris is to get a salary of $6,000 per annum. Interest is to be paid at 8% per annum, right? And interest is charged on drawings at 10% for the year. The net profit we are given is $95,950. We are asked to prepare the partnership appropriation account, right, for the year ending of December, right? And that is 10 marks. So let's jump right into that. First thing, you start with the names, right? So Chris and Dorcas, partnership appropriation account. And if you have not seen my video on the theory for partnership accounts, then you can watch till the end of the video, right? And it will be in the link below, right? So you can see my video on the theory. So if you're not sure about how to get the theory behind partnership accounting, then you need to watch that video. All right. So for the year ending the 31st of December 2004. All right. So we start off with our net profit, right? So net profit is what we would start off with. All right. So our net profit is what we are going to be starting off with. The net profit figure that was given to us is 95,950. 95,950, right? And then the next thing that we need to do is add interest on drawings. So we're adding in the interest on drawings, right, for Chris and Dorcas. So the interest on drawings for Chris would be, if you look at it now, Chris's drawings for the entire year, he made two drawings, one in June and one in December. So at the end of the year, Chris's drawings would be, and let's pull out our calculators now, right, to get that information. Let me pull out this calculator. So we're pulling out our calculator now. So as we see, Chris, right, 17,000, he made two, so it is 34,000 for the year for Chris. So the interest that is charged on drawings is 10%. So 10% of 34,000, right? You can just take off the zero, but let's not work it like that, right? So multiply by 10, divide by 100, well, 3,400. So that is Chris's drawings, interest on drawings, 3,400. But not only did Chris draw money, Dorcas also draw or withdrew money. So let us look at how much is it for Dorcas. Dorcas made 3 withdrawals for the year, right? 3 $12,000 withdrawals for the year. So let us do that now. So it is 36,000 and it is 10%. So times 10 divided by 100 equal 3,600. They actually was kind to you guys to give you, these easy figures in terms of, 3,600. So when you work that now, that would come up to 3,600 plus 3,400. That would be $7,000. So $7,000, and you're adding that now to your net profit, right? So it is 95,950 plus $7,000 equal 102,950. So it is $102,950. All right. So we move on. The next item, right, in the appropriation account, based on the format that you would have been shown, right, based on the format that you would have been shown, is less salary. We were told that Chris is to receive salary, so we less salary, and this salary is for Chris, and it is $6,000, right? So it is $6,000. We are also going to subtract any interest that is paid on capital. So we also less interest on capital, right? And this goes to both of them. So we go Chris and we go Dorcas. All right. Now the interest on capital is charged at 8% per annum. So these are the capital balances there. Chris's balance, capital balance is 40,000. So it's really going to be 8%, right, of $40,000. And for Dorcas, it's going to be 8% of what? $60,000. So it is 8% of $60,000, right? So for Chris, 8% of 40,000, so it's going to be 8 divided by 100 multiplied by 40,000. That will be equal to $3,200. $3,200. And for Dorcas, it's going to be 8%, 8 divided by 100 multiplied by 60,000, and that would give us $4,800. So $4,800, right? So we are now going to sum all of these items that need to be subtracted, right? So the 6,000, so the 4,800 plus the 3,200 plus the $6,000, and that would give us $14,000. So that's $14,000. Right. So we do this, we find the difference between those two figures, right? And then we get what? $88,950. So that's $88,950. And this is what we call the balance of profits. Balance of profits, right? Now we have to share it now. So we go share of profits. And this is where it gets a little bit tricky, as I was telling you before, because we have to now share these guys' profits. And they told us that the profit sharing ratio is in the same ratio as their capital. But to be fair, they made it easy for you guys. To be fair, I must say, to be fair, they made it easy for you guys, because if you look at their capital account balances, right, you will see that Dorcas invested 60,000, Chris invested 40,000. So together that is what, $100,000. And they say in the same ratio as their capital. So if you want to work that out, you don't need to work it out because it's 60-40, right? 60%, 40%. But if you need to work it out, you could add both of their capital. So 40,000 plus 60,000 equal 100,000. And they said in the same ratio. So what you would do now to find out the ratio, all right, is simply say 40,000, which is what Chris would have invested, divided by 100,000, right? Multiply by 100 to get the percentage, which is 40%. So you know that Chris is to get 40%, and if Chris is to get 40%, then it would mean that Dorcas is to get what? 60%. So Chris is to get 40% of the amount that is to be shared, which is $88,950. And Dorcas is to get 60% of $88,950, right? So that's what we need to do now. We just need to calculate that, and basically we are finished. So you go 40, right, divide by 100. Sorry. So 40 divided by 100 multiply by 88,950, and you get 35,580. 35,580, right? We could calculate Dorcas's own, or we could simply subtract it from, right? Because it's two of them, we just subtract it. So the 35,580 minus 88,950 equal 53,370. 53,370, right? So we simply share their profits. 88,950. And we double line that because it's now the same, right? And that is it. The appropriation account is finished, right? And that is easy 10 marks. How much minutes did that take us? Not much, right? Very easy. Let's move on to part B, which values 9 marks. It says prepare the partnership and partnership capital and current accounts, right? As at the 31st of December 2004. So they're asking us to create the capital and current accounts. Now, in my last upload, I would have told you about how you go about creating the current account, and I was telling you that the current account is really called the fluctuating capital account because the capital was included in that current account. And I told you that if you see a question where they're asking you for both the capital and the current account, then you can separate them. So I'm going to show you how to separate that right now. So you can separate them or you can do them together, right? So let's look at it. Right, so we're going to need 9 columns here. All right, so let's work with this for now. So this is our date here. This is our details. This is Chris. This is which is Dorcas. So do it. The details. This Dorcas. All right. All right, so I'm just going to create one account for both of them, the fluctuating capital account, right, where you see how it works. All right, so this is their current account. All right, so if you realize they give us the current account balances, which is $5,000 and $3,000. All right, so and they said that it is credit, right? Remember that I told you in my last upload that that is a good sign when you see it is credited. So they gave us the opening balances. All right, the opening balances for it. So date is actually January 1, and these are the balance brought down. Right, for Chris it is $5,000, and for Dorcas it is $3,000. All right, so we continue. Remember that the items on the credit side of the current account, the items that are on the credit side of the current account are items that increases your capital. So let's put in the capital figure. So the capital figure for Chris is $40,000. $40,000. The capital figure for Dorcas is $60,000. We add interest on capital. So we have interest on capital. Interest on capital, we'll have to look back at our appropriation account. Interest on capital for Chris is $3,200, and for Dorcas it is $4,800. Right? We add whatever salary was paid, but the salary was paid to Chris, which is $6,000. So Chris is getting salary. Dorcas is not getting any, so we won't put anything there. You can probably put a little dash there to signify that he's not getting any. Then you add the share of the profits, right? So Chris is getting 35,580. That is what we get from our appropriation. And Dorcas is getting more profits, 53,370. Right? We go on the credit side and we put in our drawings figure. Drawings figure for Chris, right? Drawings figure for Chris is what? $34,000. $34,000. Drawings figure for Dorcas is $36,000. That is what it is there. Yes, $36,000. Right. And then we put in the interest on drawings. Interest on drawings for Chris. Interest on drawings for Chris is $3,400. $3,400. Interest on drawings for Dorcas is $3,600. We have entered everything now. All we need to do now is to balance off these accounts. We are going to get our balance carried down. Hopefully it's on this side. Let's see. Right? I'm just going to go ahead and put in the balance carried down information there. But we have to add up both sides. So let's do Chris's account first. So Chris's account would come with 34,000 plus 3,400. That would be equal to 37,400. That's the debit side. 34,400. So we can write it here, 37,400. And then let's do the credit side now. So the credit side is for Chris's account is 5,000 plus 40,000 plus 3,200 plus 6,000 plus 35,580. That's equal to 89,780. So we know that the balance carried on is definitely going to be on the debit side. That's a good sign. So 89,780, right? 89,780. And that will be minus 37,400 to get the balance carried down. That's 52,380. So the balance carried on is 52,380. Right. Good. So you can now delete this. So now we move on to balancing of Dorcas's account. So let's use the debit side first. 36,000 plus 3,600. That is equal to 39,600. So let's put it down here because we don't want to forget it. 39,600. Now let's go and calculate the credit side. So it's 3,000 plus 60,000 plus 4,800 plus 53,370. And that gives us a grand total of 121,170, right? So we definitely know that the balance carried down again is going to be on the credit side. So we have to subtract the debit side balance, 39,600, 600. So the balance carried down is 92,970. 92,970, right? And so both sides are now equal, 121,170. Right, so these are our totals. So we can double line them. And we have our balance carried down, right? You can feel free to put in a balance brought down if you want to. You can just leave it like this. But this is basically how you do the current account. And their current account is completed. The last question asks for you to explain the meaning of a debit balance on a partner's current account. The meaning of a debit balance on a partner's current account, it would mean that instead of the balance BD being here on the credit side, it would be on this side. And what it means is that the partners owe the business money instead of the business owing the partners money. And that could be as a result of the partners withdrawing too much money from the business. But there you have it, right? 20 marks just like that in under 20 minutes, right? So let me know what you think in the comments. Let me know if this was helpful. And if it was helpful, please share, please leave a like, and also leave a comment, right? Remember to subscribe. All right? Well, good. And see you in the next one.